The Chinese yuan sank to a new 7-month low against the US dollar today. The battered yuan was trading just a few steps away from the critical level of 160 and kept traders on a high alert for any intervention from Japan's authorities. Generally speaking, this trading week shifts the focus of markets from economics to politics. In the United States, the first presidential debate between Joe Biden and Donald Trump is scheduled for tomorrow. In France, the first round of the snap elections offered by President Macron is taking place this weekend. Needless to say, in any unclear situation, the market acts in the same way, that the market waits, does not take risks, and buys safe assets. How are things going this time? The US dollar opened today very volatile relative to its 6 major peers. Its index is trading within the intraday corridor between 105.30 and 105.50 points and has already made several amplitudes of different degrees. Although by and large nothing has changed, the US dollar index has just rebounded to the upper border of the range in which it has been trading for just over a week. By the way, yesterday San Francisco Fed Reserve Bank President MERI DALEY said that the regulator must wait for a confident decline in inflation to 2% before deciding on a rate cut. And this hawkish comment could be the reason for a slight rebound of the US dollar index to 105.58. Let me remind you that these days there will be several more statements from Fed Reserve policymakers. Stock markets are also anticipating the release of a crucial economic data to revise the outlook for monetary policy in the US. On Monday, the Wall Street benchmark stock index, the S&P 500, closed down 0.31%. However, 9 of its 11 major sectors ended the session in the green. Today, the main indicator of the American stock market opened lower in the intraday corridor between 5,447 and 5,490 points. Today, investors are also cautious. Firstly, several fresh comments are expected from Fed Reserve policymakers this week. Secondly, the economic calendar contains several important reports on the US economy. Among them will be the Consumer Price Index, the Fed Reserve's preferred measure of inflation, and there will also be reports on consumer spending and income, the third GDP estimate for the first quarter, and the trade balance. You can learn more about the impact of each of these indicators on the forex market in our trader calendar. As for the euro's outlook, the odds are that it will gradually shift downwards. That's the euro-dollar pair is likely to move back to the levels at which the instrument opened this trading week. The single European currency was braced by President Macron's shocking call for the snap elections. To sum up, the euro has been on a roller coaster since the beginning of June amid political turmoil in France, and the euro's fall against the US dollar to 1.0725 means a loss of 1%. Curiously, the main currency pair is trading in the range of 1.07 to 1.08 for most of this year. Perhaps that's why, despite the breakout of 1.07, the bears were unable to continue their downward cycle. As a result, first traders cut on short positions and then the euro returned to its usual range. Once the euro-dollar pair settles above this support, the euro will be able to regain its footing. Importantly, Sunday's elections in France are only the first round of voting. Moreover, its results may differ significantly from the figures of preliminary opinion polls. If it happens, the euro could spring a surprise and break out of its current range upward. Let us remind you that the extreme right wing received more than 31% of the votes, and the centrists, led by Emmanuel Macron, received half as much, only 14.7%. Interestingly, the oil market is also overwhelmed by apprehension. For example, the Brent price first got trapped at $86 per barrel and then moved lower and consolidated in a narrow range of 85.50 to 85.80. Our analysts suggest that the Brent price may move even lower to around $85 per barrel. However, much will depend on today's data on the U.S. oil inventories from the American Petroleum Institute. If they show growth again, then the outlook for a decline in oil prices will be realized. But if we see a decrease in oil reserves, then the door will be open for a further increase in oil prices. At the same time, uncertainty about demand remains in the oil market, since China, as the largest consumer of crude oil, is struggling with economic troubles and the U.S. Central Bank intends to maintain high interest rates. This greatly restrains bullish sentiment and pushes the price of oil down. You have watched the review of the global financial markets for today, June 25. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments, and experts are always ready to answer your questions. Thank you for watching and see you online tomorrow.